This episode of Untold Stories is sponsored by SafePal. You'll hear more about them later on in this episode.
It was kind of a no-brainer thinking, okay, so what we have here is the ability to have third-party verification on the supply chain, but we also saw that there was a distribution chain. It kind of turned the Cardano blockchain into nearly like a platform.
All right, super excited to be back here. I hope everyone had a really good weekend. What is up? Good morning, good afternoon. I am Charlie Shrem, your host, and you're listening and watching to another epic episode of Untold Stories, where you and I together, through bull and bear markets, we take the time and we understand deep topics, things that we really want to be able to. I think what I'm realizing is that everything that we're going to be doing in the future is going to exist on a blockchain. And what I mean is that right now we have the option to use crypto for cool things in dApps and tokenization. But I really do think in the very near future, within 10 years, every year, it's almost going to be a necessity that our applications that we're building now on various blockchains across the world are going to be the default of how things are going to be done. And so we're excited to talk about that. We have a great guest today, Frederik Gregaard. This is Untold Stories. Frederik, you're the CEO of the Cardano Foundation's adoption strategy. You know, you came from a crazy world of building out OTC exchanges, liquidity pools, high frequency trading. You work with banks, infrastructure providers. You've worked with different type of big data, DLTs, blockchain. You've been in the space a long time. And you've kind of settled here and helping one of the top 5, blockchains, one of the most well-known blockchains started by a good friend of mine, Charles Hodgkinson, and his team and everyone. And you're, kind of leading. You're like the chief ambassador, if you will. Thanks for coming on the show. And is that what you kind of consider yourself, the chief ambassador?
Well, that's an excellent question. I haven't thought so much about it. I thought about maybe the chief enabler, and giving the power back to the people who really need it. I think there's a lot of really great ambassadors out there. I think I'm probably more of an enabler.
That's amazing. I like that. What's your background? What did I miss?
Well, yeah, I guess, I quit the army. I did quite some years in the army and a part of long-range reconnaissance. I went into business school and I had a really amazing lecture around economy. And I really wanted to go out and express my view. So I walked into my local bank and I said, I would like to buy some oil futures. And the teller just looked at me and started laughing and said, that you can't do that. You are not an institutional investor. You don't have the credentials. You don't have the education and so on. And I said, but I have a view and I want to express it. And I was really not allowed to do that. So I really started my journey on democratizing access to capital markets, because I thought it was extremely unfair that only an elite class of people had access to express their views on their own finances. So that's actually how I entered capital markets. So really worked a lot around, education, giving farmers the ability to hedge their harvest, giving, small and medium-sized companies an ability to do currency hedging, moving into, figuring out how can we actually level the playing field. So it's not just the large institutional investors who has the information asymmetry who allows them to do a trade, or the access to do a trade, or the tools to do a trade, but really how can everybody actually have access to this world? And there were some tough learnings there in that process.
I mean, tell me how that would work, a potential token for farmers to hedge their harvest.
This was way before blockchain, so there was no tokenization at that time. It was really just futures contracts and classical institutional or capital markets instruments. And what was really odd to me was that the farmers, they were being overbanked, really, right? Because they had they were used to taking risk, right? If you think about it, they basically took all of their money and they put it in into grains, which they put into the fields, right? And then they were waiting, 5 to 6 months, and then hopefully they got a return which was bigger than the investment. So a lot of the bankers, they were really out there and pushing different very aggressive strategies, and the farmers was kind of used to taking risk, but it was always through an intermediary and always through a person who had access to the system, and there was a certain extent of bias, right? So the banker was selling a product which was good for the bank, but not always as good for the farmer. And now I kind of thought about it differently. I thought, if the farmer is able to wield, large machines and, have employees and be responsible for animal welfare and so on, why shouldn't they be able to also, on a daily basis when they look out in the fields to start taking some decisions about their finances and around their harvest in a better way? So I actually, I put on a suit and I started up my car and I drove around from farm to farm, and I met these farmers in the barns basically, and we were talking about access and hedging strategies and currencies and how they could basically take back the ability to control their own finances after their view, and how they could challenge the banks and actually be master in their own house, if you
I've
can
heard
say
this
it like
kind of
that.
problem a lot, like the last mile of person that if they had access to capital markets, then everyone in between would have the same access too. It's like an equal playing field. And what that means is not just the ability to like get a mortgage, but potentially tokenize or liquefy or access the same type of liquidity products to earn the same type of yield, invest in the same type of businesses that are a lot safer, that only certain like hedge funds and certain type of capital, the wealthier, the super 1%. And so like farmers have to spend a lot of money because they're only harvest once a year. They have to spend a lot of money. Like what are they spending right now in order to be able to have some way to what are they doing? Borrowing against their future harvest right now, and they're spending a lot of money for that?
That's more or less how it worked back then. I mean, this is about 15, 16 years ago or something like that now, right? Times moves fast, right? But yeah, that's actually how the
Really
business
cool.
model was, right? They took a loan against the real estate and against the future harvest, right? And then they basically put everything out in the fields into the control of Mother Earth and their hands and their ability from a knowledge often passed down from generations to generations.
Yeah.
But suddenly, what happened was that new products emerged, which was not as, let's say, as transparent as the old ones, right? And you're suddenly finding yourself in a situation before the Lehman crisis and so on, where some of these structured products were so advanced that even with a PhD in finance, you were actually struggling a little bit to understand the risk return ratio, and is it really capital guaranteed, and what does that really mean, and who's guaranteeing what. And I think what we saw
Fascinating.
sort of in the first the larger financial crisis, at least in my lifetime, was that the financial markets were really skewed to one side, and it really protected one side of the players. And when we went out on the other side of the financial crisis, unfortunately, what we saw was that most of the people who caused the financial crisis were still in the game. They got bailed out and so on, but the average investor or the average business owner, they were not bailed out. And I got really angry about that. And then, I kind of changed my view a little bit on, is it really about democratizing trading, or is it more around creating an equal playing field
Hmm.
for the whole world population? And then that was about the time where Bitcoin came out. And at that time, I was really into the infrastructure. So I was building infrastructure for bank and asset managers. And I started to basically go up to the owners of the bank, and I said, you know what, we need to be a part of this new blockchain revolution. Who
Yeah,
has
how do
this
they
new
take that?
currency? Not very well. Basically, I had a long discussion with the legal and the compliance department, and the European Central Bank at that time issued a couple of very straight warnings around the Silk Road and around the usage of Bitcoin. And it was very hard for them to see any kind of positive in it. So I actually was told that if I was continuing that path, then I could not stay in the bank. So what I did instead was I used my spare time to help startup companies in the blockchain space to get banked. because most of these companies could not get a regular bank because they were so scared about this European Central Bank statements and papers was out at that time. But what they really needed was just currency hedging. They really just needed normal corporate banking. It was none of the banks at that time were able to take custody of a Bitcoin or anything like that. So it was really about you had a dollar income and you were paying salaries in Swiss francs or in euros. And it was nearly impossible to get banks. So I was helping
I
fintech
remember those days.
companies, to get banking
days.
connections and helping some startups to have a product to market fit. So that was really interesting.
How did you end up at the Cardano Foundation?
Yeah. So at one point in my career in banking, I noticed that there was a problem. And the problem was that I was trying to put technology into banks, and I was trying to ensure that the banks became more profitable. The clients got more happy. They got more decision rights. The bankers had the ability to guide their clients in a better way. And I thought everybody would be happy. But look and behold, none of the banks really accepted this, new set of technologies and new set of ways to make better products for their clients. And I couldn't understand it. And I kept walking into this door that this was due to regulation or this was due to audit requirements. And I thought, okay, what do you do if you don't really 100% understand regulation and audit requirements? You join the best audit and law firm in the world. Yeah. So I basically contacted PwC and I told them that they needed to hire me because I definitely had a skill set they didn't have, and I needed to be working together with the best auditors and the best lawyers in the world. And they laughed at me because, if you have a pretty good career and you want to join a big four company without being a licensed auditor or, a lawyer, there's not much use for you, right? So I had to come in with a solid business case, and it took me over, I think, about 1.5 years to convince PwC to hire me. And I went through one business meeting after the other where all these, partners were sitting, and I was, had to do presentations. And in one of those, I kind of changed my tact, and I said, you know what, this is what I'm going to bring to the table. And a part of that was a list of, I think it was about 10, 15 companies, where I said these companies, they would get so much out of the combined forces of a worldwide execution partner who really truly understands third-party audit and security audits, but also understands the regulatory space. And on that list was actually Cardano. Because I noticed that Cardano was doing some really good things around the financial systems and around rethinking blockchain. But I also noticed that it seemed to me that something was wrong in the execution. So I basically had Cardano there, and it took me many years to be able to actually meet your good friend Charles Hodgkinson and the team and be able to actually convince them that I had something to offer as a consultant, as a representative from PwC back then. And then at a certain time, I stood and had built up the blockchain, the European blockchain practice of PwC, where we did the first crypto banks, and we did the first implementation of altcoins in a banking space and so on. And I was looking at, changing tact and changing speed. And it was quite obvious that Cardano was one of the opportunities I had really to do that. And
Cardano
actually,
is definitely push forward in that.
Yes, for sure. And whether you think about the impact of the 20th century energy infrastructure on our atmosphere and climate, or the impact of large technology platforms on our society, or we are seeing technology create new problems as unintended consequences. I mean, these dramatic changes to the human brain and behavior, which we basically, or I've been, monitoring the last 15 years, and I've been seeing a lot also in the trading space, and the invasion of privacy, the loss of work across all elements with robots and automatization and workforce technologies, who really were intended to provide real benefits to society, they're actually causing a lot of harm. And when I stood there with, a lot of investment banking experience, and then I suddenly understand that it was not the audit and it was not the regulatory space who was hindering these banks for adopting what are these things, but it was really the humans. It was how we work and the cultural barrier was my learnings in PwC. So therefore, it was kind of, I wouldn't say it was a no-brainer.
We weren't, you think the industry wasn't talking the talk and walking the walk?
Yeah, certainly. I mean, when you
I
kind of
agree
look
with
at
that.
this,
Yeah.
yeah, I mean, it's middle management in many of the banks. They're just humans, and what they do is they protect a team of people, of individuals, who is vertically specialized in moving data from one spreadsheet to another, having two people checking that, right? And doing some kind of verification that the numbers are correct. And then they say to senior management, you know what, we cannot optimize that because, I'm looking at a team of, 20, 30 people who all have families and they're all in an age or maybe don't have an interest in getting further education. I mean, I'm not talking about everybody here, but I'm talking about a very large chunk of,
Are we
of people here who's they don't have the
yeah.
motivation, nor do they have the incentives to learn something new or to retire themselves in their role and take on a new role.
Guys, I am so excited to talk about our newest presenting sponsor, SafePal. SafePal is an all-in-one solution. You got a beautiful hardware wallet. You have this amazing fireproof cipher. You got a mobile wallet, an extension wallet similar to MetaMask. You're talking about an all-in-one solution for all of your crypto needs. Founded in 2018, SafePal is a Binance Labs-backed Singapore-based company, the venture arm, where their mission is to make crypto secure and simple for everyone. You got cross-chain swapping, trading services, and more. SafePal supports over 40 different blockchains. I mean, check this out. Look at this. If you back up your private seed in this beautiful metal SafePal backup here and you keep it in your safe, fires or water or nothing degrading over time, you should not be backing up your crypto on pieces of paper. I mean, look at this. Look at the S1 here. It's so cool. This is the hardware wallet. I'm used to using the Trezor or the Ledger wallet, but SafePal is a lot better because not only do you get the hardware wallet and the backup cipher, but you also get the mobile wallet, the extension on your Google Chrome or whatever Firefox you use. So it all works together. You don't have to worry about man-in-the-middle attacks and everything like that. You can go to safepal.com, use the coupon code Charlie, and you'll get any of these amazing products. The extension wallet is free, the mobile wallet is free, the hardware wallet and the backup are really, really well priced. It's all super safe and secure, and I love it. I mean, there's no other way you should be using your crypto than SafePal. When we're
Um,
talking about we're talking about these industries accepting open source software that's like less than 15 years old. So of course, it's so very new. Satoshi invented this beautiful thing called Bitcoin that we all love today, and then the technology that's come out of that. Uh, are we talking about permission versus or permission blockchains? Are they more interested in private or public blockchains? Do you think some of these industries?
So we've seen in the last maybe 5, 6, 7 years that many of these regulated players, they said, oh, this blockchain might have something. And my board is saying that we need to do some proof of concept. But the idea that you had to interact with something you don't own, something you don't control, and something you, from a legal point of view,
Tough.
cannot face off with was very tough. So many of these banks, they actually went with a private blockchain. And the conclusion of that was it doesn't work, right? Or the total cost of ownership is simply too big. So we're actually seeing a trend in the last year or so that many of the people who started out in the private permission space are now going to a more public space because the platform economics, the security, and also the actual features is much better in the public
Wow.
space. However,
That's
the problem is the utility token. So when you kind of look at the utility token and you see the volatility we have in the markets right now, and you look at the regulatory uncertainty, for instance, in the US, where a token can be a commodity, it can be a payment, it can be a security, it can be literally everything, right? And there is, defragmentation between the states in terms of the graduation, and you see China suddenly saying we don't do any crypto. Then you're suddenly saying, oh, so there's a lot of utility, there's a lot of functions, and I can do a lot with the blockchains. But can I then operate in China? Can I then operate in the US? So it's a different animal to deal with. And that is what we are seeing coming through now, that people are saying, actually, there is more value on blockchains than we initially thought. And we are willing to bridge that gap with the utility token based on education and taking some smart choices on the risk which is associated with these utility tokens.
I mean, what you just said is so brilliant because it explains something that I've been in the back of my head for the past year and a half. And that's that slow, like you said it perfectly, that slow uh, pull towards permission blockchains kind of going to the, to the back burner, and very large corporations, uh, you know, from Disney to Nike to Google to IBM, everyone really, everyone, basically, and even like public-private partnerships, governments, NGOs, private groups of people, cities, partnering with these public blockchains like yours, for example. It's such an interesting dynamic. Like, how do they reconcile some of the things that I thought they couldn't reconcile before?
Yeah, it has really multiple facets, right? So we just partnered with the country of Georgia. And Georgia has a very interesting story because they were part of the Soviet Union. And what many people don't know is that wine production was most likely invented in Georgia. So wine
I
is
have a
actually
bottle of
not,
Georgian wine, actually.
yeah.
Friend sent it to me. I haven't
And
drank it yet.
yeah, and basically due to the, when marketing really came around in the 80s and the 90s, right? The ability to market a product and all these kind of things, um, they were basically not a part of that because they were only able to sell the wine in the Soviet Union. So you had really strong brands like Italy and Spain and partly California and other things, building up really strong distribution layers and very big names. But when the country of Georgia then suddenly saw what the blockchain can do, and we started putting full batches of wine, so every individual wine bottle on the blockchain, we saw something very specific happening. First of all, they were able to show that the controls and the quality they had from the National Wine Agency and the production could be anchored into the blockchain. Secondly, what we saw was that the brand you cannot change overnight. But there is a new type of people out there. I like to call them blockchain citizens. And they're very wary about what's happening on the internet. They know, that deep fakes and fake and, all these things happening, but they're also very concerned about the footprint on Mother Earth. And what we could see on the blockchain was that, countries or regions or communities who normally would never buy Georgian wine, specifically not on the internet, suddenly started buying Georgian wine. And when they saw that, it was kind of a no-brainer, saying, okay, so what we have here is the ability to, have third-party verification on the supply chain, but we also saw that there was a distribution chain. It kind of turned the Cardano blockchain into nearly like a platform, like an eBay for wine, because you could suddenly explore metadata and certain things, and you had verification from third parties in there. And that actually, allowed them to break away or at least move on some other parameters in the product mix, which you normally, is very hard to do without having a lot of funding. So I think there's a lot of aspects to that. Another aspect is David Goliath, right? So what you have very often is that you have a very dominant player, and then you have a lot of small people, and they kind of come together in some kind of a trade alliance, or they come together as a community, and they want to do something together, but they don't have full trust in each other. And normally it would be the big player who has a better infrastructure and more capital. They will say, oh, we will run the servers, and we will run the, the quality control, and we will do the audit, right?
This is brilliant.
But what then happens is that the small players are like, oh, hold on a second. How do we actually know that the big player is not changing or manipulating the data or the rules for the transactions or something like that? And what we see is that in these public permissionless blockchains, this is the first time that not one giant player has the ability to change the rules as we go along in our collaboration and cannot bully the small players. So it actually creates an even playing field, plus it creates the ability for the small players to verify if the rules has been changed, broken, or the data has been manipulated in any kind of format. So in this way, it actually creates the possibility for large players to get trust from multiple players that normally they won't be speaking to, and small players for the first time to trust large players without actually, having the fear of being bullied. And I think this creates completely new alliances and completely new ways of solving problems across borders and across cultures.
Political parties, governments, when you have like governments fall apart and they have to like redo coalitions and stuff, could be like, potential blockchain DAOs or whatever. That it's all the promises and everything are transparent. It's so cool.
Yeah. And then on top of that, depending on your architecture, so one of the things Cardano we really try and pay emphasis on is to lower the barriers of entry into the Cardano ecosystem. So the way the Cardano protocol is designed is basically designed with security and formal verification in mind, and it's about going slow because it is about representation of value, governance, and identities. But it also gives you the ability wherever you are in the world with an internet connection for a very, very, very low entry fee. So you just need a Raspberry Pi or a Stone Pi. You can actually become a stake pool operator. And what that basically means is that you can, by downloading some free content on the internet, you can use the source code, you can participate in the security of the Cardano protocol, you can pull in your community into that, you can get a passive income depending on where you are. That might be sufficient that you can send your schools to send your kids to school, or you can, participate in the local community by having an income which is beyond your local area. And that means that you are bridging a part of the digital divide. It means that you are suddenly connecting to the global economy. It means that you're creating a type of identity by always being able to close those blocks and create a transaction history, which then has a value for a part of the systems of the world, right? So it creates a type of identity. We cannot call it a national identity, but it creates an identity you actually have a value, and it creates a solid value, and not just for your community, but also for the other people who operate in the Cardano network.
What you
So I
just
think this,
described, oh, sorry.
yeah, go ahead.
I was saying what you just described is literally the Byzantine general's problem, so that's literally just what it is. It's all you have like Goliath, and you have different parties that don't trust each other, and how do you bring them together? Because now they don't have to trust in another technology in order to, or like another centralized party in order to be like the referee in what they're trying to do. That other party could potentially be like bought off, or you don't have full trust in there, insurance product or whatever. But now it's just the technology itself doing it. It's so cool.
Yeah.
Um, I was gonna
That's
ask
actually
you
one
that.
of the reasons why we looked at how do we give identity to students. So Cardano is doing a big project in Ethiopia, which is a little bit of a hot potato, right? Because the country is in turmoil, right? But I think what's interesting about identity for students and schools is that you create the freedom to leave the country on a different premises. So normally, if you're a refugee from a poor country and you go to a Western country, you might end up, driving a taxi or cleaning the floor somewhere. But if you actually have, third-party verified school records that you are a nurse or you're a doctor or whatever you are, and you can verify that on the blockchain, which is immutable and not controlled, but there is the national agencies has written to that,
Yeah,
you actually are, the value of what you're bringing to the new country who takes you with, open or sort of open
yeah.
arms is completely different. So it's changing the value proposition of the human lives.
Growing up in New York City, I remember as a kid, the we'd always ask the yellow cab driver uh, where they were from, if they talked about like kind of their whole background or whatever. And when I was younger, a lot of times they loved talking and things like that. And they would say, "Yeah, I was a doctor in my old country, and now I'm driving this tax." You know, I totally see that. Just and I'm like, why aren't we living in a world where like that data can be verified or the source can be verified? It doesn't make sense to me. So it's nice to hear that we're kind of moving in that direction. For my listeners who are and myself really too, who are not like as familiar with Cardano as we need to be, Bitcoin operates off of like the proof of work consensus algorithm. Ethereum just moved to proof of stake from proof of work. Um, Cardano operates a little bit differently. It's a little bit. It's like a almost like a little bit of like an offshoot of proof of stake, if you will.
Yeah, I mean, so Cardano is a scientific approach to blockchain. And we have some of the most cited papers in the whole cryptography realm. And I think that the way I look at it is that Cardano actually invented proof of stake. We are one of the first successful implementations of proof of stake. And the way we implement the proof of stake is different than, for instance, Ethereum. And the main difference here is, how do you punish evil actors? And this is kind of interesting because this goes back to the concept of, do you truly believe that people are good, or do you truly believe that people are evil? And some people call it slashing. And what it really does is that I explained to you before the notion of staking. So on Bitcoin and proof of work, the economic scarce resource you're operating with is computing power, which is a derivative of your CPU and electricity, really. And you're trying to solve a very hard calculation, and you protect the network because this is really hard work. You need to have really economic resources there. On a proof of stake blockchain, it's actually is a virtual asset which you are optimizing towards. And there's some differences here in proof of stake. And how Cardano is operated is that it's actually trust. So it's how you show trust to stake pool operators by staking your ADA. And now, to protect that some of these stake pool operators are not changing the time series and trying to, front run a certain transaction or in other ways manipulate the system, many blockchains has this notion of slashing, or the ability that your stake is basically locked in, or that even worse, that your stake can be withdrawn or taken away from you. So if you would be a stake pool operator and I was be staking to you to participate in the security of the network and also the governance of the network, because I'm showing you that I trust you more than I trust somebody else, right? And I trust maybe some of the things you do. But if you do something evil, my money or my tokens can basically be taken away from me. And that's what slashing is. However, Cardano believes that there is sufficient community, let's say, call it policing, and sufficient good incentives in the network that we don't need to have that. That actually means that over 70% of Cardano's of the tokens is all staked, and there is no ability for a stake pool operator to remove your staking value. And that also means that there is no financial contract going on, because the stake pool operator will never have access to my ADA. And that means that the network in a certain way is built on very secure, and we can mathematically prove that this model works, right? And we are very large, as you said in the start, right? But it also is built on more optimistic principles and more inclusion and less punishment than many of the other proof of stake blockchains.
You talk about like what makes a project or a crypto company successful. And a lot of it is like the core principles, like the ethos of like the founder, or like the and even Satoshi in his even though he disappeared, like kind of the ethos of the project. And then you have so many companies, the Brian Armstrong of Coinbase, but then you have like Jesse of Kraken, and like they look at Kraken as a very successful company because of kind of the core values of Jesse. And you have all these different projects and companies. Charles has always been about, and everyone I talk to at Cardano, whether it's the foundation or IOHK, it's like a very academic perspective, studying not just people and not just math, but also like projecting how things could happen, and almost to a point of studying things way before you launch them, and how a lot of other blockchains would just launch things and then come up with ideas and kind of experiment in the real world. You have taken a very like test net, hey, we want to make sure we get it right the first time approach, which I want to like really stress on. That's not the norm. That's not the norm at all.
And it might not be the right way of doing it, but we really think it is.
That's your thing.
And
yeah, I like
what
that.
I'm trying to say to people specifically on blockchains, because blockchains is a very different animal in open source. So when you look at open source in general, what you have is that you have the ability to fork the source code, right? And have, at any given time, thousands of different versions of a source code, which you can basically deploy into your infrastructure. Now, the blockchains work differently, because what they have is many of them have what we call public source. So you have the ability to read the source code and to replicate the source code, but the strength is actually not the technology. The strength is the underlying communities who basically believe and sacrifice their time and their effort to deploy applications on the network and keep creating transactions, who keep securing the network. So the strength is not so much how good is the technology, because many of us is public source, so we can basically just take the best of we see out there. It's how the Legos are put together and how much of the community support it. The other part, which is really horrible because of this difference in how open source and blockchain work is that at any given time is nearly only one version of the code who's on mainnet. What that means is that if mainnet goes down, all the thousands of companies who today is on Cardano, they have a problem. Now, if there is a bug in a version of some source code on the Linux kernel, it doesn't matter so much that at any given time, there's hundreds of bugs in any kind of version of the Linux source code. Sure. It only matters for your implementation. But in this case, it matters for everybody. So one of the mantras I keep saying to people is, we need to unlearn this design thinking principle, which is move fast and break things. And we need to start move slower and fix things. And I think, unfortunately, some of our industry has been moving so fast and being so focused on, oh, it doesn't matter if it breaks, because then we learn something and we do something else. But what Cardano really is about is, how do you represent values, identities, and governance all in one social system? And when we speak about the identities of a person, of a state, or what we really truly hold, to our heart, it should not just be broken. It should not just be, filled with bugs and, be stolen, right? It is so important that it actually prevails. And it is also there in 10, 20, and 30 years' time. And therefore, I think that at least when you look at the use cases around Cardano, what we are trying to show is that moving slower and fixing things is a fantastic way to ensure that what you put on chain is things which stays on chain, and things who really is near and dear to the human soul and the communities which we love.
I mean, you're making my heart sing, because you're saying everything that I love. We're out of time, but I really appreciate you coming on Untold Stories today. Frederik Gregaard of the Cardano Foundation, and I'm excited to have you back again soon and to chat about what's been going on.
I would love to do that. And a big shout out, we are having the Cardano Summit very soon, coming up in a month's time. So we are holding 54 events around the world. There's one in New York as well.
Awesome.
And there's a big one in Lausanne. It's a free event where we celebrate the Cardano ecosystem, the growth, all the architects of the future. But we also invited a lot of skeptics, a lot of companies who never thought about using decentralized applications. And we're hoping to have a really good party where there's a lot of education going on and a lot of use cases are being shown. So go in on our website and have a look at the Cardano Summit, which is coming up here in November.
So when we're talking about being like a crypto investor, or if you have a crypto startup and you want to be able to tokenize and securitize your revenue or your business, you should start to look at companies like AngelBlock. AngelBlock is a DeFi protocol aimed at solving issues of fundraising for digital assets and also making the process extremely crypto native. When you're talking about post-raise governance to ensure startups are delivering the what they promised doing, and investor capital is actually protected through different voting where your token is actually a vote, on-chain vesting, cap chain management, fully transparent token distribution. Companies and businesses that come out of AngelBlock are going to be very successful in that sense. I feel like it's a lot better than kind of going through individual companies on their own and hopefully trying to like throw things at the wall to see what sticks. So check out angelblock.com, go to their website, sign up for their email newsletter, check out the different companies in the space. I think AngelBlock is going to be that next wave of top tier protocols and crypto companies. So check them out.